Today we're going to be filming Compound with Carson episode 2. So we're going to jump right into this one. So Compound Carson, this is a series where I'm going to be putting $100 a week into this taxable brokerage account, and we're going to watch it compound. So last week I bought $100 of Adobe, Nike, Win, and Salesforce. This week we bought a couple more stocks. We bought our $100 worth. So we actually did this today on Friday. We outperformed pretty nicely. We're up to $200, which is to be expected. I put in $200, I'm down $1. No big deal. Market's been a little shaky with the Iran-Israel conflict, which if you guys did not see, America did just get involved. We did just bomb Iran, so we bombed 3 of their nuclear plants. So we'll see how that escalates. I'm going to be giving you updates on X if you want to follow me there. But my portfolio actually did slightly outperform the S&P. Not much data. We started on June 10th, but, 12 days. You can go a long way. 12 days compounds, baby. So 0.7, we're ahead of the market. And we're still down. We're just not down as much as the market. So take what you can get. Honestly, not much huge winners this week. It was kind of the international. Got hit the hardest, down 2%, which I guess is to be expected. A lot of international companies are getting hit because of the tariffs and stuff. Tariffs and then the Israel war. So it's going a little bit crazy there. America held up pretty well this week. I was surprised real estate's down that much. Usually uncertainty, but the Fed fund rate's not helping realty income. So once that goes down, realty income will continue to be great for me. So, and not much news on Adobe. It was just kind of trading down after earnings. Not concerned about that. Nike, nothing. Salesforce, nothing. Nike did actually just delay their Skims partnership, which might be a problem. Which kind of sucks. They kind of slept it under the rug. So the big one here, though, is Wynn Resorts. This one's up 5.1%. And this one's actually because MGM is, in the past 5 days, up 4.42%. And because they reported earnings, they double beat and up their forecast. And since they're very similar to Wynn Resorts, like casino, hotel, luxury resorts, they trend pretty similarly, and since MGM had good forecast, they're assuming Wynn's going to have a good forecast. So that's why they're up. We'll see if that holds. This is my portfolio right now. You can take a look into it. We got Wynn Resorts, which is about 13% of the account. Salesforce, about 25% of the account. Nike's about 24.71% of the account. And then we have Adobe at 37%. So this is what it's looking like right now. You look at the 52-week lows. Wynn's honestly the highest one. These ones are all pretty low. And you can see why. Well, if we bring to the next part. I bought $50 of Adobe. This stock is going to be, that's 36% in the account now. It's at a really low. And it's been doing terrible. Like if you mean, go look at this. Down about 1.1%. So they've been trending down, and they're a great company. The last 5 days they're down 5.35%, and not much on that. They're worth $160 billion. So EPS 21, pretty good. If you look at it, this is their valuation: 18.31 forward P. That's a joke. 5 years they're down 7%. Honestly, their net income, their revenue, everything looked great over these last 5 years, honestly. They've had a couple hiccups, but nothing too serious. It's been pretty linear. Free cash flow growing, dividends growing, repurchases growing. And they're down in the last 5 years, honestly, just because their valuation has shrank. I'll show you this. Like, look at their net income. Since 2020, the last 5 years, 5.2 to $7 billion. That's a $2 billion increase almost. Which on 5 is about 40% net income. They're very profitable. You got net income margins of 30%. And you can see they're not really issuing stock. They're only buying it back. Like, they just hit record share buybacks of $12 billion this year. If you did $12 billion by 160, they're buying like 5-6% of their stock. Then my next up, I bought Salesforce. Salesforce, just another profitable tech company. It's been underperforming recently. You look at their, the 16% net income margins. EPS growing like 10 to 12% a year prime. 4P at 23. Just a great, stable company. They're in a really niche market, which I think is really cool. They basically help customers. They help the clients or the business deal with customers' relations, basically. That's what they do, and they have really cool tech and software for that. Yep, you see this net income. The only thing that was a hiccup was this 2023, which I actually did a little research into before I bought them. And this was actually because, one, their revenue went down, and then they invested a lot into transactions, like buying companies. Very bold stuff. So, yeah, they didn't take much net income this year, but you see this $6.2 billion of net income this year. They issued a little bit of stock, but the share buybacks definitely make it up. They spent $8.3 billion on repurchasing shares, and they have a growing dividend. So right now this dividend's 0.62%, which is pretty small, but payout ratio is about 15.64%. So they have plenty of room to grow. This guy. So total debt is like $12 billion, which you're like, man, that's a lot of debt. They have $17 billion in cash, so that's like almost no debt, basically. So, next up, I bought $25 of Nike. This is a guy that I bought last week, and if you look at my 3 stocks to buy video, I covered Nike pretty aggressively. It was like 10 minutes of Nike talk, so why I own them. But to be short, I think Elliott Hill is a great CEO, and I think he's going to turn the ship around. They've had their struggles in the last 5 years, and I think Elliott Hill will turn the bus around. So I think they're doing great with the win now strategy, going back to the retailers, getting rid of this all online retail market space. They're going to transition to a 50-50 split, basically, which looks good. And you can see, I mean, over the last 5 years, their revenue has been pretty good. It was good, and they hit 2023, 2024. Ooh, that's not good. And then 2025, boom. Not good. Because their foot traffic's so down. They lost so much shelf space. They're losing so much market to other brands like Hoka. So, not great. Not great at all. You see their net income margin's still way better than the sector median. And their gross margins are actually slightly down. Their net income margin is also down. So, not great there. This is also a very stable company. Like, everybody knows Nike. You can go to almost any country in the world, ask what is Nike, they'll probably know. And you can look at their dividend stats. It's about 2.5% dividend yield, which is pretty good. Payout ratio about 51%. I feel pretty cautious about that. I do need to keep an eye on that because their next EPS score is going to be really low, but I think they'll return the profitability. It's Elliott Hill's getting rid of all old inventory right now, which I actually support. They're running a clunky business. They have like $12 billion in inventory. So it's kind of dumb. But yeah, they're also going to do massive share repurchases here. Like, they're probably going to be able to do $3 billion, I would say, on average, especially at this low price. They might push this to like 5. So that would be like 6% of the stock. They could go crazy. But 3.4% of the stock, if they do $3 billion, is about each year. They're about $88 billion. They were at like 160 not too long ago, so I mean, they do $50 billion in revenue. Its forward price says like 2. And then this is going to be my dividend update. This is what the dividends are looking like. I'm not really focused on dividends. I really am focused on beating the S&P 500 or the NASDAQ, stuff like that, those metrics. But dividends are always nice. My dividend yield is lower than 1%, mainly because my biggest position is Adobe. Adobe doesn't pay a dividend. They do share buybacks. So, but I got Wynn Resorts. You own about 0.29%. I have Salesforce, paying me 31 cents, and Nike, which is $1.31. Nike's my biggest dividend in this account and my more private account. So, pretty cool stuff. And that's going to be the end of it.